Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. This is the chart of silver priced in US dollars. That's the monthly scale. No market, no matter how strong it is, goes up in a straight line without any correction. And I think the time has come for the precious metals to go sideways for a few weeks, if not a bit longer. I do not have the same wave count in the case of silver and gold. I don't have identical wave count for both of them. So we're going to have to be patient and see over time which one is the one that should really prevail. I do have a tendency to prefer the one that is in gold, simply because I see confirmation in other major gold and silver producers, stocks, yes, and other indices of the precious metals. So if you like, the wave count that I have here for you in the case of silver is a little bit like the old fellow, and I suspect that I might have to modify it, but I'm not going to do it now, because right now the pattern that I have right from the bottom here is perfectly acceptable as a complete one shot, one move. Okay, so let's stick with that and see how it develops. But I have little doubt that we are heading there. Okay, over the long term we are heading there. And quite frankly, the more corrections we have on the upside, yeah, on the up movement here, on the way up, that's a good thing. That's a good thing. You don't want to have a market running up restlessly and then it reaches a peak and then let go and it just collapses, you know. You want to have a market that is building a very, very solid, yes, steps structure here, that when it goes down you have a lot of support levels. Yes, that's the ideal for a long-term advance, and so you don't fall into something like that, you see. We have already seen an absolutely incredible jump that shattered all the overhead resistance that kept it down for many years. You look back, we are, well, we're here 2012. It's already running into mid-range here that was established almost 10 years ago. So that's absolutely very impressive strength that was displayed here. Let's go and see the weekly. So as I said, I have a wave count and I'm not terribly excited about, but it's okay right now in the case of silver, and it says that we have seen a 1 2 1 2 3 4 5 3 4 5. So that's it, it's complete. It's a 5-wave run right from the bottom. And I'll go to the daily. You'll see the details even better. Do you see 1 2 1 2 3 4 1 2 3 4 5? That's your fifth on the red scale, that's your third on the blue scale. Here's another fourth wave and the final jump. Okay, the reversal in the precious metals on Friday, as far as I'm concerned, has sent a signal that for now we are really heading for a correction. There is no crash. There is absolutely, for those who are invested for the long term, and I'm talking about 6 months plus, like if you are looking really at 2, 3 years, 5 years from now, you're invested in ETFs, you're invested in major gold and silver producers, there's nothing to do. You're not going to try to jump in for 2% here, 3% there. If you're not a trader, you're a long-term investor, it is going to correct. Sure, it's going to come down. It's going to correct. If this wave count is correct, it's going to come down. There is a first scope for this one to come down to 25, 24. Yeah, but we don't know how quickly it's going to do it. But in essence, that is what is waiting for the silver investors. Lateral movement over several months before it is very likely to continue even higher. Now I'm going to break to the 60 minutes. So we see some details here. That is the preferred reading for the short-term price action. We've got this as A, B, C, D, E, and the E leg, as you can see, most likely took the shape of a triangle in itself. Now we had a debate. If you remember yesterday, I was raising the prospects that maybe the fourth wave ended here, at which point there could be one more push up, and but the breakdown has been quite severe. And in the case of some gold and silver stocks, major producers, I think that the message is clear. I think that that's the top. You know, in the most optimistic case, I would say there's going to be another visit here. Yes, in a completely insane interpretation that I do not adopt at this point, and I do not think it's necessary. This is going to be one. That's going to be two, and it's going to go up in the third wave. Now, if we wake up for, wake up Monday, and you never know what can happen in today's world over the weekend. Lots of things can happen, and all of a sudden silver is up 30. It's heading toward 31. Before you can just rub your eyes, get up, it's already there. Then the assumption must be that this could become a 1-2. But as I said to you, I think that if I were to put my chips here, I wouldn't favor this scenario. I would think that this is the top, and there's going to be further lateral movement here, and over the next several days it's going to weaken, and it's going to reach towards 24. Okay, there is no doubt that there is a lot of support here, and it's going to bounce back. Okay, I'm not talking about bouncing back to the extent of running straight through the previous high. No, it's again, remember, it's a correction, so it's going to go on and on for a while. That's what I would say at this point. I'm going to jump to the 15 minutes. We'll have a look at some of the details that we have here. We have probably a 1, 2, 3, 4, 5. That means that could serve as an A. No problem. I actually would put some labelings here for those who are really focused on it very, very short term. And could be quite interesting. Take a look. Let's go with this. Imagine this is you A, and that's going to be you B, because you had 1, 2, 3, 4, 5. Okay, so that's an A, B, C. This is you A of a lower level. That's you B. That could be you C, D, E, and that's going to be you B complete. Okay, just that you see what I mean. I'll have to highlight that. So imagine that's what I have in mind. That's you A. UB is going to be on this scale, so I'll put it quickly here. That's UB. Okay, so an idealized development of the movement here would generate this if we are indeed in a correction. So you got your A, you are going to in due course get your B like that and prepare for a slide. If you see a triangle here, a very clear triangle, and you see silver beginning to sink under 27.30, you can assume with very high degree of confidence that you are going down for a C. That C could take silver down in terms of the ratios. I'm going to put some ratios here for you. So suppose we are right in our interpretation. That's our A. the B, suppose it ends here. Equality between the C and the A, which I don't think is going to be the case. I think we're going to go for an extension. But equality will take you to 26.24. Extension will take you to 24.97. And a very big extension will take it all the way down to 23 roughly. Yeah. So you should be prepared mentally for this downswing here. Okay, so that's silver priced in US dollars. Now this is the chart of gold priced in US dollars, and that's the weekly. And we have here a case where I think we are done with a move that started from here. I am reasonably happy with this structure being 1-2. It could even be like that, but that's not going to change materially the forecast for the months to come. Yes, it's not going to change it materially, but let's stick with this. That's 1-2, and I think that's another 1-2. Okay, so my best reading is that we are now we have seen the end of the third wave on the mauve scale, and we are going now for that fourth wave. Do you see clearly this is the fourth wave? Yeah. There is a chance, I wouldn't rate it as a very big chance, but there is potentially a chance that the set of subdivisions that I've used right from here on the daily scale, I'm showing you two alternatives. In fact, I don't know if you noticed that, are calling for tight correction here over, let's say, 2-3 trading days, and then pulling higher one more time. How would that play out? Look carefully. If you come up, that's your 1-2. Then you have 5 waves. 1, 2, 3, 4, 5. That's going to be another 1-2. Okay, so you end up with a 1-2, 1-2. That's a 3. That's a 4. That's a 5 complete. But that's only the third in black. So that means that you are going to witness here a fourth wave. Yes, that will go on, as I said, for about 3 trading days, 3-4 trading days, fairly tight range. It's probably almost certainly not going to go back to 1,950. No, it's not going to go there. Why? Why? Well, because of the nature of the price action up to night, the move has a certain character. It's not just a question of character, the move has a certain beat. The move has a certain rhythm. Once you see something which doesn't sort of click with the beat, with the rhythm, with the character that you have witnessed up to now, Mr. Market is basically talking to you, is telling you this is something else. And you see it from the proportions of the moves. Okay, that's the way I read it. We have a structure here. Yes, and the structure is basically the message of Mr. Market. He's talking to us. That's the way of the dialogue. That's how the dialogue that we have. He puts forward the message, and our job is to interpret that. And this will call for a tight correction here. Look, if it goes down there, does that look to you like this is a correction, the fourth wave on the black scale that relates to the tiny correction that we have seen here? Doesn't make sense. Do you agree? So it's pretty simple. If it sinks back to 1,950, 1,925, we are not going to adopt this interpretation. We will basically say that we had 1, we had 2, we had 3 ending here. Okay, and we are now in a fourth wave like that. That's going to go on for about 4 weeks, 6 weeks, and then we'll continue higher. I'm going to break to the 60 minutes. And the way I'm going about interpreting this one is as follows. My fourth wave ended here, and I go up with 1, 2, 3, 4, 5. Yes, it looks like the third wave is tiny, but in fact when you check, and you have to check, the third wave is okay, it's not the shortest. Do you see? If you E-leg ended here, 1, which would be equality between the fifth and the third, would have taken gold to 2082. It didn't even get there. So we are fine. We are fine with this interpretation. We had actually an extended first. This is an extended first, and that's the correction. Okay. If we go for another move up, as I explained, I don't think it's going to go down by a lot. Ideally, if we go for further move up short term, it will bounce back nicely to 2060 in short order. It's going to do it fairly quickly, and then it's just going to sag, going sideways here for about 2 days, and then final push, and that's it. And I wouldn't expect really a continuous run. I think it is going to come back. It's going to come back, so be very careful. If you get another push high in gold, that's not the time to jump in and buy with two hands for very short-term trading. Be very careful. It's going to reverse. Now, if we continue down, then Mr. Market gives us the answer. Breaking under 2013 is raising the prospects of 1970, as I said, 1950, and there is massive support around here, and it is almost certainly going to bounce back. Okay, that's my interpretation for gold price in US dollars. Some details about my service currently at 50% off for first-time users. You need to go on my website. The homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit you know, where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here. It takes you to the page where it explains to you. You should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you are not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you are interested, after you took a trial, you're interested to come back, you can still benefit from the low price for the next full year. But you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos, okay? So you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.